You can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
Global central banks are accelerating their gold purchases at an unprecedented pace. This trend gained momentum after the Russia-Ukraine conflict and has expanded as countries reduce their reliance on U.S. dollar-denominated assets. The World Gold Council's 2024 Central Bank Gold Reserve Survey highlights that the complex geopolitical and financial landscape drives demand for gold. In 2023, central banks added 1,037 tons of gold, the second highest annual purchase on record, following a historic high of 1,082 tons in 2022. Amid these record figures, central banks remain optimistic about gold as a reserve asset. According to the survey, conducted between February 19th and April 30th with 70 participants, 29% of central banks plan to increase their gold reserves over the next 12 months, the highest percentage recorded since the survey's inception in 2018. Mario Innecco explores the implications of increasing gold reserves on global currency dynamics, especially the pressure it could place on fiat currencies such as the US dollar. He highlights how this shift reflects a growing distrust in fiat systems as nations increasingly turn to gold as a stable and reliable asset. In addition to gold, Innecco sees real physical demand for silver from countries like China and India. Silver's dual role as both an investment asset and an industrial metal makes it particularly sensitive to economic slowdowns, yet well-positioned to benefit during periods of robust growth. So far this year, silver prices have surged 30%, fueled by a fourth consecutive year of supply deficit, rising demand from the rapidly expanding photovoltaic (PV) industry, and spillover momentum from gold, which has similarly climbed around 30% year-to-date. Mario expects silver to outperform gold eventually, but warns that silver will be far more volatile on its way up and down. He notes that key resistance levels for silver are currently around $32.50 to $33, which the market has approached recently. Stick around for the full video, and if you find it helpful, make sure to like and subscribe. We're excited to see more of you joining our community, with only 11% subscribed so far. Help us hit that 1,000 milestone.
Since 2022, if you remember, 2022 was a record amount of net buying for central banks ever since the Bretton Woods Agreement in the 40s. And last year it was almost the same amount. And it's not just BRICS nations. You've had countries like Poland and other countries that are not in BRICS buying a lot of gold because they see the writing on the wall. I think that people are concerned of leaving their reserves with the U.S. or with Europe. It might be frozen or confiscated. And as I said earlier, Russia, they're up to like 31.5% of their reserves in gold. And it looks like the target is going to be 40. So I think they're going to have to keep buying gold. And don't forget, these reserves always change depending on international trade. So I don't think it's going to stop. And I think eventually countries in the West are going to have to catch up as well. So I don't see any slowing down in the purchasing of gold. But I think, the price has been driven more by the central banking sector, the consumer, the retail market in the West is not that strong, even though we're seeing anecdotal evidence, some proof or maybe some stories that show that people are starting to wake up, they're selling gold at Costco now and that they're running out of gold. So I think there's still a lot to see in the gold space, especially on the retail side, not just in North America, but also in Europe. And if you add that to the central banking buying that I think is going to continue, we're just in the beginning, I think, Elijah, of this gold bull market. Silver is a much easier market for the bullion banks and the central banks to control, because it's a smaller market, but I think they're running out of rope because there's a lot of physical, real demand for silver from China, India, and other countries, and eventually they'll have to cover these massive short paper positions. But the level that they're trying to defend right now is around 32.50 or even 33. I think we almost touched 33 a week or 10 days ago. So yeah, I do expect eventually silver to outperform gold, but you need to remember that silver will be a lot more volatile on the way up and down.
The BRICS bloc is quickly moving to establish a new world order under the leadership of Russia, as the current BRICS chair has called on member states to create an alternative to the International Monetary Fund, IMF, to counter political pressure from Western nations. BRICS nations have been seeking to reduce their reliance on the US dollar. This de-dollarization trend has been driven by the weaponization of the dollar through sanctions, concerns over US debt, and a desire for greater financial autonomy. Mario Innecco highlights that gold is not only appreciating against the US dollar but also against euros, British pounds, Japanese yen, and even BRICS currencies. He explains that in a gold-backed system, countries can settle trade and extinguish debt with gold, a fact often overlooked. Innecco emphasizes that unlike fiat currencies, gold and silver serve as tangible assets that truly settle obligations. Now, let's redirect our attention to a video.
I think they will announce something. I'm not sure it's a currency. It's just a trade settlement mechanism. They're going to call it, I think, the unit. And it will be 40% gold-backed. That's the plan. And 60% backed by fiat currencies, i.e. if a country has 40% of their reserves in gold, they'll have the other 60 in different currencies. And I think there's a limit to how much you can have of the other currencies. And I think they will announce something. Whether it's going to be up and running very soon is another question. But the trade amongst the BRICS plus countries is less than, I think, 35 or 30% in dollars and euros now. So it's growing, it's moving that way. And the reason they're using gold is because they're not going to use the dollar. And the only thing really that you can trust as a monetary reserve is gold. I mean, people have been fooled for the last 50 years into thinking that dollars and U.S. treasuries are safe. I think that's the whole problem here, is that people are going to realize, the most powerful countries outside the West, well, if they're going to go for an alternative, they're going to go for gold. And I think that's going to wake humanity up to how important gold is as a monetary asset. It's already doing so, even though gold is going up not just in dollars, but also in euros, British pounds, in Japanese yen. I mean, Japanese yen, we're almost at 400,000 yen per troy ounce. And even in the own BRICS fiat currencies, it's going up. But I saw a report from the Jerusalem Post the other day that Russia has 31.5% of its reserves now in gold, and I think that's going to keep growing. Oh yeah, it will definitely be a problem for the West, for government bond markets, not just U.S. treasuries, but UK gilts and European government bond markets. These countries, they're not gonna, they will not buy as many Western treasuries and government bonds as they normally would have if they weren't going into a gold-backed system. And that's going to put pressure on bond yields, and we've seen bond yields rise ever since the Fed cut rates on September 18th. It might be a little bit of the market saying the Fed is done too much in terms of cutting the things. Inflation's still pretty strong, but I think it's also to do with the fact that there will be a lot less demand for our paper, which, as you know, is you can't pay off fiat currency. The only way to retire fiat currency is to issue more and more debt. In a gold-backed system, they'll be able to settle trade, extinguish debt with gold. That's what people don't realize, that with gold and silver as well, you can extinguish debt. That's how you pay a debt. Someone comes with a promissory note or a fiat currency, and you give them the gold and silver, and you've settled the debt.
In today's fragile global landscape, gold remains a vital hedge against the risks posed by geopolitical shocks, such as sanctions and rising global tensions. Unlike fiat currencies, which can be printed endlessly, gold is a finite resource, making it the preferred asset during economic uncertainty. Recognizing this, countries worldwide have been purchasing gold in bulk. Central banks holding over 36,000 metric tons, roughly 1/5 of all the gold ever mined, understand its value as the ultimate safety net. Since 2009, central banks have been net buyers, acquiring 1 out of every 8 ounces produced globally in the past decade alone. Are you currently investing in gold or other precious metals? If so, what has influenced your decision? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.